Intel is now looking at a significantly lower valuation for its self-driving car unit's initial public offering. That's according to the Wall Street Journal. Joining us with more on what's ahead for Mobileye is Yahoo Finance's Dan Howley. Hey, Dan, good morning. You know, this was really interesting and highly anticipated on the part of both Intel and the market to do this IPO.
Yeah, Julie, that's right. This was an IPO that really was supposed to help spur more movement in the self-driving car space. Obviously, Mobileye is a division of Intel. Or an Intel company at this point. They help power self-driving car capabilities, basically the ability for these cars to kind of see what's around them, hence Mobileye. And originally, they're going for a valuation of around $50 billion, and that's fallen down to expectations of $20 billion. And you know, it has to do with mostly, among other things, the market, obviously higher inflation, interest rates, and then just the general pullback we've seen, except for what we're looking at in the past few days, perhaps, of the market. So it looks like, you know, just the conditions for this kind of IPO aren't exactly great. And the market itself, as far as IPOs go, is one of the worst that we've seen in quite a while. So Intel just trying to basically get this out the door and see if perhaps they can still get some kind of win out of this. I think really, there's the kind of idea that this company needs a big win. This IPO would potentially be that, but now that it's fallen from the 50 million to the 20 million, I think really it looks as though this is going to be just another rough showing for Intel when this does go public.
Dan, while we have you and more in the software space, we're also following news that Microsoft is laying off workers. What do we know about the total number of workers and how that relates kind of contextually to what we've seen in the tech space?
Yeah, they're expected to lay off around 1,000 workers. So, Microsoft's obviously a massive company. This is about 10% maybe of their workforce. And so it is a large move. And it's not something that we haven't seen through other companies or across other companies. Obviously, we've seen layoffs at the likes of Netflix and Snap. I think this is really one of the first big names that we're going to see layoffs from. Meta is kind of doing this sort of layoffs, sort of not, where they're almost kind of seemingly trying to push people out the door who they say aren't performing as well. Now, you would imagine that that's just what happens regularly. But, when you kind of have this mandate from the CEO to get people out the door who aren't performing, it seems to speak less to just general performance and more to the performance of the company rather than those workers. So I do think this is something we're going to see a little more pickup from in companies. But, when you look at Microsoft in general, their last quarter, they did miss on earnings and revenue. But when you look at their cloud, they still managed to do very well. I think they still managed to push that up by double digits as far as overall revenue goes. So it's not as though this is a company that, is necessarily hurting, but they are starting to see this kind of slowdown. In particular, they're being stung by the pullback in consumer and business spending in the PC market. I think, we've seen and talked about that 19.5% drop in Q3 year over year of consumer, or rather spending on PCs. So, Microsoft makes a lot of money on OEMs, providing them with Windows codes. And so this is really just part of that cycle as well, where so many people had bought PCs during the pandemic. Now they don't need a new one for quite a while. I mean, usually your computer's supposed to last you, 3, 5, maybe 7 years if you're lucky. So the chances that we're going to see a huge burst of activity there is really, not in the cards. We do have the holiday season coming up. Microsoft just announced a handful of new products. We should see new products coming from some of its OEM partners. So, we'll just have to wait and see what the results come from them. But, this really does kind of just speak to the larger issues that we're seeing in the market, as well as I said, that slowdown.
Yes, most definitely. And we'll see if all of this starts showing up in the jobs report numbers, for example, particularly for tech hiring. Thanks, Dan. Appreciate it.